Ladies and gentlemen, welcome back to another episode of our Thrive in China Roundtable. For those of you that are new to our roundtable, this is a weekly session that we offer to our community, providing updates, trends in regards to administrative processes that are occurring in both China and Hong Kong. It's every Wednesday from 1 p.m. Central European Time. And we touch on a variety of subjects, everything from accounting issues, tax issues, trademark issues, all the way through to what we're talking today is about individual income tax and benefits that will ease the lives of expatriates in China. Just a short introduction, very short introduction to who we are. Woodburn Accountants and Advisors is one of China and Hong Kong's most trusted business setup and corporate advisory firms. Our services range from pre-investment advisory all the way through to incorporation. And really our bread and butter business is outsourcing of financial functions, also the outsourcing of CFO functions, all the way from accounting, tax, payroll, corporate governance, corporate administration. And obviously, we tailor make all of our services based on the needs and the wishes and the commitment levels and risk mitigation levels of our clients. A little bit about myself. My name is Christina Kohler-Colucci. I'm the head of business advisory at Woodburn Accountants and Advisors. My specialty for the last 20 years has been focused on inbound investment into China and helping foreign investors enter the Chinese market. Our head office is based in Hong Kong, and we do offer very similar services there, but my expertise specifically is in China. And I've helped over 750 companies with their investment advisory, so their pre-investment, all the way through to implementing their business models, and ultimately through our CFO outsourcing solutions, helping them grow and scale and pivot in the Chinese market. If you'd like to learn more about what we do, certainly head on over to our website. Otherwise, you're always free to scan my QR code for WeChat and connect with me. So today's topic, we're talking about the fiscal ease for expatriates in China and the extension of the income tax exemption in China. This regulation actually came out in 2023. It is being applied for the 4 years, and I'll touch on that as well, until December 31st, 2027. So we're going to talk a little bit about 4 different areas today. And the first one is the income tax exemption extension that is being offered to foreigners. Now, I thought I would start off with what China is doing to try and keep foreigners in market. There are so many statistics out there in regards to the exodus of foreigners and expatriates in China, predominantly due to COVID. The latest percentage amount that I heard this week from a newsletter was that in Shanghai alone, over 90% of all foreigners have left China. So I just wanted to touch on a little bit about what is China doing to keep talent, foreign talent there, okay? And the 5 things I'm going to be touching on right now have always been there. This is nothing new. It really is up to whether your company is offering these things or not, okay? So income tax exemption or reduction is basically looking at your residency status in China. It is looking at the bilateral tax treaties between China and the home jurisdictions. And it's looking at the benefits in kind, or BIKs, or another word would be allowances, that are being offered to expatriates for tax exemption or tax reduction, okay? And it's a matter of having a specific type of employment contract in order to benefit from that. The other advantage is tax equalization and gross up. So if you are an expatriate, ideally, if you're relocating from your home jurisdiction to China, then the company will want to either tax equalize or gross up your pay, that at least you're not earning less than the net income you were earning in your home jurisdiction, right? And that's what we call tax equalization and gross up. The other is offering housing and living allowances and using that in a tax efficient manner to reduce the tax liabilities of the expatriates. Social Security contributions is always a bit of a tough subject because although there's a state law which states that, by state, I mean there's a country law which states that Social Security contributions should be, foreigners should contribute to the Social Security contributions in China. There are differences from city to city, and I'll be talking about best practice on that. But there's also the issue that a lot of expatriates want to keep paying into their Social Security contributions in their home jurisdictions as well, particularly in places like Europe, and we'll be touching on that a little bit later. And then last but not least, it's taking advantage of the tax treaties. Not every single country, but most countries around the world do have a double taxation agreement with China, providing tax relief between both jurisdictions so that ultimately when you are working in one jurisdiction, you're only paying taxes in that jurisdiction. Obviously, when you're looking at the US, where you're taxed on your worldwide income and you still need to file a tax return as an American in the US. Now, don't take my word for it because I'm not a US tax advisor. I just know what a lot of my clients are doing, is that you pay taxes in China, you do your tax declaration in the US, you declare what you are paying in China to the US, and there might be potentially a difference that you have to settle in the US. But this is a requirement as an American that you have to do. In European countries, I'm not 100% sure what is actually required. Now, just to give a little bit of background, I think it's really important to understand what are the components of a salary in China for a foreigner. Salary packages in China usually have two components: mandatory components, mandatory from a Chinese legal standpoint, and voluntary components that are really based on the company regulations. So as I highlighted here, you do have to pinpoint a base gross salary. That's mandatory. Social insurance and housing fund, I've listed here as mandatory, although that would really depend on the city that you're living in within China. In Shanghai, for example, it is still not 100% mandatory to contribute to the social insurance and housing fund scheme. And actually, it's not the housing fund scheme. There's only, I think, three components out of the 6 that you have to contribute to. However, it is best practice from a company perspective that you do contribute as a foreigner to the social insurance and housing fund scheme. Commissions, bonuses, dividends, allowances are actually all voluntary components. Now, I think it's really important to talk from a small, medium-sized business, what their perspectives are on this. So, and I'll give you the example of Woodburn. At Woodburn, when we hire foreigners, we stick with the mandatory. I would rather pay more to my expatriates that they then choose what housing they want, what type of private insurances they want, whether they want to do language courses is up to them. Every foreigner is a little bit different on their needs and wants. So as a small business, I also don't have the internal resources to constantly check that my foreigners are providing me valid and legitimate FAPIAOs. And I say this because I have had foreigners provide me with fake FAPIAOs corresponding to the allowances we were being offered, which is why we stopped the regulation. I'm not dealing with that anymore. I just didn't want my staff having to check constantly on the verification and the authenticity of these FAPIAOs. Now, larger organizations that hire many expats may have very different company policies and may have also the internal resources to check on this. But from a small, medium point of view, they may not be offering it. So I think it's really important because there are going to be people who view this recording or on here live who may have the expectation that companies in China, as a foreigner, you should be getting allowances. There's no should. It's totally up to the company's decision on whether they want to. And obviously, it gives more benefits to the employee. Obviously, it's a wonderful incentive to offer them, but it's not a guarantee that you'll get. So I want to highlight this in terms of the makeup of the salary packages, in terms of what is mandatory and what is voluntary. Now, as I mentioned earlier, in terms of social insurances, I'm going to call it the new social insurance scheme, but I mean, it's 12 years ago now, almost 13 years where it's come out. In 2011, the Labor Bureau came out with the whole spiel that social insurance should be applicable to any employee that is residing in China. And the reason they were doing that is because they wanted to create a fair playing field, that even foreigners should contribute to this scheme, and it should be fair then with Chinese employees. The downside to the implementation of this ruling is that when it filtered down to the different cities within China, some cities decided to not execute on it, and other cities did. I remember in 2011, Beijing only had one district, which was Chaoyang district, impose this scheme, which meant that anybody residing in Chaoyang as a foreigner had to contribute. Any company residing in Chaoyang had to contribute to this social insurance scheme for their foreigners. So in places like Beijing now, Shenzhen, Tianjin, Nanjing, foreigners are treated as domestic workers, local workers, meaning that the social insurance payments are compulsory. The 6 categories of social insurance, from accidental insurance, pension fund, maternity insurance, housing fund is the 6th, and then there are 2 more. Not all of that is for foreigners. There are 3, I believe, that are specific to foreigners. Shanghai is still iffy. And I don't know what other word to use except iffy, whereby there is a mixture of actions that are taking place. And I have to say, in recent times, I have been seeing that more and more foreign companies are taking the route of contributing to the social insurance scheme for their foreign employees. Those that are not are generally foreign entrepreneurs who are still getting away with the fact that they don't have to contribute. The social insurance scheme is now being handled also by the tax bureaus. And we've been also noticing that some tax officers, if they see that you do have foreign employees, or if that you are an entrepreneur in a specific district with a specific tax officer, will be requested to start contributing to the social insurance and housing fund scheme based on the tax officer kind of pushing you to do it. We have not seen any repercussions of backdating or backtracking to 2011. I've not seen this thus far. I don't know if it's been happening or not, but so far we have not had that experience with any of our clients. Allowances is a big topic. And when I talk about allowances, I want to talk about 2 areas of allowances. One are special deduction items, which are applicable to foreigners and local Chinese. And I'm going to talk about BIKs to foreigners, which are benefits in kind to foreigners. Okay. What I want to highlight with these 2 schemes is that as a foreigner, you can only choose one of them. Okay. And maybe some of you were not aware of this. You have to choose either the special deduction items or the BIKs that are specific to foreigners. And I'll talk a little bit about the benefits of each of those. Okay. So in 2019, there were these special additional deductions offered, and they were offered not just to foreign investors, but they were also offered to local Chinese employees. So if you're not aware of this, this is something that you can offer to your Chinese employees if you wish. When you are doing your income tax calculation, first you have to understand that there's a standard deduction that is applicable to everybody of an annual amount of 60,000 RMB or a monthly amount of 5,000 RMB. I highlight this because this is fixed. This amount is absolutely fixed. And then you have further deductions, which are called special additional deductions that can be applied, or in the case of foreigners, applying the BIKs, okay, which are these allowances. Now, the 7 there are 7 types of additional deductions that can be offered. Nursing expenses, for me, this really relates to nursery school, like you're going to bring your children to the nursery. This was newly added in 2022. You have children's educational expenses, continuing education, healthcare for serious illness, housing loan interest, expenses for supporting the elderly, and housing rent. Okay. In August 2023, they upped the cap of how much you can deduct for 3 things. One was nursery expenses for children. So this has been upped to the equivalent of 2,000 RMB per child per month. Children's education has been upped to 2,000 RMB per child per month. And the last one is supporting the elderly has been upped from a cap of 2,000 to a cap now of 3,000 RMB. That can be split between siblings, and the cap for each sibling can only be up to 1,500 RMB. Now, I just want to highlight, because this is where the difference might appear for you, is the children's education. When we are talking about these amounts of 1,000 RMB, 2,000 RMB, this is cost of Chinese public school. Okay. If you guys are not aware, the annual cost of one child's schooling in a private school is anywhere between 200,000 and 350,000 RMB. It makes no sense using these special deductions as a foreigner if you've got children in international schools, because you'll be capped at 2,000 RMB per child, which means that you can only do a deduction of 2,000 RMB for your income tax, okay? Which is why a lot of foreigners who do have children are using the BIKs in order to be able to lower their income tax liabilities, okay? But again, remember, you have to choose one of those. Now, the allowances for foreigners, and this is the BIKs that I've been talking about, the expenses that can be exempt from individual income tax are things like housing allowance, meal allowance, laundry, the relocation fee, which is a one-off fee, home visitation, which is 2 flight tickets a year, language training, and children's education expense. There is no cap on this, and there is no there's no cap on this, and there's no law stating how much you can declare as an allowance as part of your total compensation, okay? So when we're thinking about a salary package, we are thinking about a gross salary, and then we're thinking about maybe bonuses, which come once a year. Maybe if you're a sales manager, foreign sales manager, maybe sales commissions once a quarter. Depends on I know in the recruitment profession, most foreign headhunters get commissions on a quarterly basis. And then you've got gross salary, bonuses, commissions potentially. Maybe you're earning dividends if you are kind of a shareholder or you are the sole investor of your Chinese entity. And then you do the deductions based on your allowances, okay? So the deductions for the allowances are all great as long as you have fapiaos, so the VAT tax invoices, to prove that these allowances have actually occurred. As is the trend in China, when you are renting a place, you might have a landlord who negotiates with you and says, I'll give you 5 to 10% lower on the housing rent if I don't have to issue you a fapiao. Which also means basically that he's not declaring the rent to anybody because there's no fapiao tracking that rent is being paid, all right? If you, however, want to claim this as an allowance and you want to use it as a tax deduction as part of your income tax, then you definitely need the fapiao readily available. Meal allowances, again, you are allowed to deduct these. Biggest question I get is how much can be deducted each month? Well, first of all, the important thing is that you need to have valid fapiaos allocated to this. And I'll touch on the pro rata scale that I abide by or that I recommend in order to avoid any issues. Home visitation is usually 2 flight tickets per year. This would include your partner and your children's flight tickets as well. And obviously, in the months that you are traveling would be the months that you can use that as a deduction. Although now that you're looking at, well, the company would look at it from a month-to-month basis and then looking at it on an annual basis. Language training fees and children's educational expenses. Again, you need the FAPIAs readily available from the schools in order to be able to track it. I know that for a lot of the international schools, you also have to show your work permit and residence visa in order for the children to be accepted into the schools. So it is a two-way street. You can't avoid not getting these FAPIAs, but these are also tax deductible items for you. So in terms of all of these deductions, and I don't want to go into too much detail of the history, it is a fact that all of these deductions are going to continue to be tax deductions until December 31st, 2027. Okay? Now, it is not clear how much of a foreign employee's salary can be used as an allowance. However, there is the rule of thumb that we say the best would be to calculate a third of your total compensation as allowances. Some people I have seen have gone up to 50% of their total compensation being allowances. Those allowances then include the housing allowance, children's educational expenses. They might take meals out because it's, meals are not a huge significant portion, but flight tickets for the relocation costs, the flight tickets would all be included, okay? So my rule of thumb is a third to be safe. I have seen it go up to 50%. What is important, and we just had this case in November, December, is that if you as a company are offering these allowances to your foreign employees, they must be stated in the employment contract. If they are not stated in the employment contract, the tax bureau will not approve these as tax deductible items. Writing them to your staff in an email does not count. Verbally agreeing on it does not count. It needs to be written in the employment contract, and the employment contract that is submitted to the tax bureau by the company will be bilingual in, well, mostly Chinese, but it will be bilingual, hopefully, if you have the English version as well. So please keep that in mind. The allowances must be indicated in the contract. Even better if you can put the amounts. And most important, the FAPIAs have to be there to support these allowances and to support these transactions. Now, I wanted to highlight what is the impact on the expatriate community in regards to this tax extension that is being offered. When it came out, now I'm going to mix up my dates because everything is kind of conjoined with COVID. When it came out that some of these tax items, there were 3 tax items that were actually going to be revoked: children's educational expenses, housing allowance, and I believe it was language training. And these 3 items were going to be removed. And it caused a huge drama, not only for the foreigners, the individuals themselves, but also for the companies. Basically, the foreigner said, oh my God, I'm not going to be earning a net salary even close to equivalent to what I've been earning before. So you, company, must now gross up my salary that I earn net to net the same amount. This is a huge stress for these Chinese subsidiaries, companies that are hiring these foreigners, because it's a huge chunk that has to get out of their budget, right? So a lot of them were rebudgeting and seeing whether it was actually feasible to be able to do this tax equalization and gross up. A lot of the foreigners were saying, well, if the company refuses to do this, actually, I'm going to be earning less in China. I may as well go back home. So a lot of them were saying, we want to leave. No point in us staying. please find us another position in our headquarters, or they were actually just going to resign. Okay. In the midst of all of this is COVID, is the Shanghai lockdowns. People were anyway starting to leave. And like I said earlier, I read a newsletter this week from a legal friend of mine in Shanghai who's there visiting. And he gave a statistic that in Shanghai alone, there are over 90% of all expatriates that have exited. I do know from personal experience that I have friends who have relocated back to Shanghai. I also have friends from my husband's company that have newly relocated to Shanghai. So I don't know if there's going to be a balance in the next few years or not, but the exodus is so large in Shanghai. I'm only talking about Shanghai because that's what I know, that people have left. But my feeling for that exodus, it's just a personal feeling, is that people have left more due to COVID than this whole tax situation. I personally think that because of COVID, because of the exodus that was happening, the Chinese government then came out with this regulation in August 2023. So it's really, really new, saying we're going to extend for 4 years, probably to restabilize and rebalance this foreign talent that was leaving. The Chinese government wants to have foreign talent. They do see the advantage of it. I am fully aware that there are a lot of people on the ground that feel like the Chinese hate foreigners, don't like them. It's a two-way street in the Western world. Here in Europe, there are people who don't like the Chinese either. And you can see their faces, or even in conversations, it's awful how they speak. I think it's kind of a two-way street. But the impact on the expatriate community by having this extension, I think, is that people are more willing to stay now as the environment stabilizes, borders are now open. There is fresh blood coming into the country in terms of new foreigners coming in, especially with borders being open, quarantines revoked. These 15-day visas that are being offered is also an incentive for people to be like, okay, I think we can move there. I just spoke today with a client who's going to be expatriating themselves, not permanently, but potentially for 1 to 2 years to build up the business and start up the business. So I am starting to see this movement. From a company perspective, it is providing companies that hire foreigners with tremendous relief, that they don't have to equalize up, that they can kind of keep the status quo and the stability within the companies. From an international school perspective, I think it's great news. There has been a huge exodus of kids. The international schools in China are generally suffering. I believe there will be closures or some forms of consolidation. I'm not sure. I have friends who've got kids in Shanghai. Class sizes are around 10, 12 kids. I've never even heard of those, how small those sizes are. And these are kids that are between the ages of 9 and 14. So it's a huge difference from the past. Hopefully, in the next 4 years, we'll see more expatriates moving there. I just got a question today from actually a staff member of mine who said, do I believe that this extension will then be extended again after 2027? It is really too early to tell. I'm very curious to see how the economy is going to grow over the next couple of years. I'm curious to see whether expatriates are going to be relocating back. Hard to tell right now whether that's going to happen. In terms of compliance and reporting, again, something very important to realize is that there is, since 2019, new income tax law. I mean, for me, now 2024, it's not really new anymore. But for those of you that are new to China, this might be new. I always have people who do research on their own and are reading articles and updates that were prior to 2019. And so they're very confused. So the current regulations are that taxable income is calculated on an annual basis. Although companies will retain your tax payable on a month-to-month basis, annual income will include not just gross salary, but it will include any other income that you are earning, whether it's through commissions, dividends, bonuses, rental income if you own property in China, royalty income, etc. Like I said earlier, there is this automatic deduction of 60,000 renminbi that you can take into account. As a foreigner, you choose either BIK, benefits in kind, or you choose the special deductions, which the Chinese people have. And then you make a calculation, okay? So you look at your gross annual taxable income. Let's say it's 350,000 renminbi. You are in grade 4. You basically have a 25% tax rate. There is the automatic deduction of 60,000 renminbi. Then you have a quick deduction of 12,000. Now, don't ask me what this quick deduction is. It is just in the formula. So you've got to take that into account. And then you do the deduction of your benefits in kind or the special deductions. And remember, you always need the FACAOs that are associated with that. Now, this roundtable comes in a perfect timing because the deadline for the annual income tax declaration is, generally speaking, March 31st, although there is a lengthier time frame for some tax bureaus where it's from March 1st to June 30th, where you can do your submission and then also payment. Generally speaking, if you are a foreign employee, the tax officer of your company will notify you when these declarations have to occur. This annual income tax declaration is not for the company to do. It is for actually you to do. You as an individual are liable to do this. If you do not know how to do it, it is really important that you communicate that to your company, to your HR, to your tax officer, to whomever, to state, I don't know how to do this. Can somebody help me to go online and submit the application? And obviously, it just goes to say you have to be truthful on this declaration. You have to declare all of your income. You never know when you do these declarations if the tax bureau is going to synchronize itself with your bank statements in China, okay? Obviously, if you have bank accounts that are outside of China and you've not been in China, your tax residency is not over 6 years old, and therefore you're not required to declare your worldwide income. You just have to follow what is in your Chinese bank statement, okay? So at a minimum, do that. So be wary of these tax deadlines. It is your responsibility, not the company's, to do it. There is a login on the system in places like Shanghai where you submit it. If you don't know how to do it, ask somebody for help to be able to do it. It's really also important, particularly as I've had a lot of foreigners be in limbo in the last few years with China. Resident individuals are basically people, foreigners, who have a work permit and have a residence visa in China, okay? For me, those are resident individuals. However, you are also a resident individual if within a tax year, which is from January to December, you have stayed for over 183 days. So if you've been in China from January 1st till July 8th, you are considered a resident in China because you've surpassed the 6-month time frame. Okay, and you are required to complete an income tax declaration. And it can be tracked by your immigration status, you know, coming into the country, going out of the country with the Immigration Bureau. Non-resident individuals are basically people that have been traveling to China on business visas and are staying in China for less than 183 days in a tax year. Now, again, I'm referring to the new tax law, income tax law, which came out in 2019, where there was a change in the residency rule. Prior to that, there was a 5-year residency rule. Now there's a 6-year residency rule. What I need foreigners to understand is that there is this 6-year residency rule that started on January 1st, 2019, and every foreigner was reset from January 1st, 2019. So if you are residing prior to January 1st, 2019 in China, you're reset, everybody is reset January 1st, 2019 as the first day they've been in China from an income tax perspective. From that point on, if you leave China, but only for a day or two here and there, your years will pile up. And at the 6-year time frame, you are automatically taxed on your worldwide income, which means all your income that you earn anywhere in the world is taxable in China. However, you can reset your tax residency if you leave China for 30 consecutive days. So if you leave China for 30 consecutive days, when you return, that is again 0.0 of the start of your tax residency. Okay, so we are now March 2024, 19, 20, 21, 22, 23. Oh, we're almost on the 6-year time frame. If you guys haven't left the country for 30 consecutive days in the last 5 years, this is the year you need to be doing that. Okay. The tax residency, if you just go in country into China and come out the same day, that's not even a single day of tax residency. You need to have stayed more than 24 hours and 1 second. And again, like I said earlier, the number of years of residency started from January 1st, 2019. So we're now March 2024. Please take that all into consideration. Now I want to finish off with the practical implications. Like, what should you guys be thinking about as individuals, as companies, okay? As an individual in China, you as an employee have to have as much transparency and clarity over your income tax regulations, your social insurances, as well as your benefits in kind. If you don't understand something from your own employer, make sure you are asking them. Make sure you have absolute transparency. In addition, make sure that you keep all of your tax receipts for your time spent in China. Now, I say this because my aunt, who is French, has just retired. Not just, she retired 3 years ago. And she is the case study I always use for this. My aunt worked for 13 years in Hong Kong, had her own business in Hong Kong, but unfortunately did not keep, when she returned to France, she did not keep her tax receipts, individual income tax receipts, nor her company tax receipts for the 13 years that she worked there. As a consequence, from French perspective, she has lost 13 years of her working life. And therefore, now that she is in retirement and is obtaining a pension, the pension she is earning is less because she's got 13 years missing. So, and predominantly it is because she could provide 0 tax receipts for her working life. So if there's any story that I want to tell you guys, is that if you are working in China, please, please, please make sure, if you're working anywhere in the world, make sure you've got your tax receipts and proof of residing there, working there, living there, because I believe, nowadays, I'm in my 40s. My husband and I have no idea where we're going to retire. Might be somewhere in Europe. We don't know, but we do know that we want to have a proper pension. And so we've been meticulous in regards to our filing systems, in regards to maintaining all of these records. So please make sure you do that. So make sure you keep your visas, your tax receipts, all of that. Even keep your housing contracts, proof of everything to show that you lived somewhere. As an employer, I think with this extension being offered in terms of allowances, it's going to ease a lot of the pain because basically the status quo can be maintained. There was a huge rush prior to the extension being announced of whether companies were going to retain expatriates in China or not, how those salary packages were going to look like. It is always good to review your salary packages, review how you're going to retain your foreigners in China, how you're going to incentivize them by having the appropriate allowances in order to beat out the competition. However, like I said at the beginning of today's presentation, I am a small, medium-sized business owner. I have foreigners on staff. I don't provide allowances. I'm not big enough to be providing allowances. So allowances are not mandatory in the packages. It's up to the company to decide whether they will be offered or not. What is really important to discuss with the foreigners is how the social insurance payments are going to be made. Are you going to contribute to that or not, depending on the city where the company is established? How are the labor contracts going to be handled? Will it be done through HQ or will it be done through the local Chinese subsidiaries? Who is doing that negotiation? And then obviously decide whether contracts, social insurance, housing funds, salary will be done by different entities or all consolidated in one. My opinion is it should be all consolidated into one. One thing I do want to highlight on this point in terms of contracts and social insurances is that my husband is Italian. He works for a Luxembourgish headquartered company. His employment contract is actually through the HQ. He is seconded, and however, it's a company policy of the HQ, so not even my husband's choice, that social insurance in Luxembourg is constantly contributed into. So not only is he employed by the Chinese entity and receives a gross salary and everything from the Chinese entity, but there is a social insurance component calculated into his package that is still contributed in Luxembourg for pension reasons. You guys have to think about this when you're structuring the foreigners that you've got when they're being seconded from HQ, whether they are still going to contribute into their home jurisdiction social insurance and pension funds as well. One thing that is critical, and because for me, it's always about transparency and clarity, and that everything is always aligned. There's alignment with the employee, the employer, and the various government bureaus like the social insurance housing fund bureaus, the labor bureaus, as well as the tax bureaus in terms of the individual income tax payments. There is a rise in enforcement from the labor bureaus, tax bureaus on this type of alignment and this checking. So make sure that you've crossed the T's, dotted the I's, and that everything makes sense within these packages. All right, this was a very, very short presentation today, guys. So far, no questions have popped in, but this is the time. If you've got any questions, please do insert them into the chat box. If you guys have any doubts or questions about your status in China or in Hong Kong, I will provide you a link to my diary and I'd be more than happy to have a call with you. Again, if you want to join the Thrive in China roundtable on WeChat, just connect with me through the QR and just type in Thrive in China. I'd be happy to let you join into the community. Next week, we're going to be talking about location choice in China and the legal and tax ramifications on that. The following week, we're going to be talking about FAPIAOs, eFAPIAOs, practical changes that have occurred. And then we're going to take a 2-week Easter break. And then on the 17th of April, we're going to be talking about brand resilience again. So as I've mentioned before, if you ever want to join our roundtables, these are individual registrations. You can go to our website, woodburnglobal.com/events, to then register for them. The whole list is there, so don't hesitate to join us. So far, there are no other questions that have popped in, so I will leave you guys there. Thank you very, very much for joining us, and I look forward to seeing you again soon. Take care and goodbye.